Today's guest is Robert Leshner, co-founder and CEO of Compound. Compound is an algorithmic autonomous interest rate protocol built for developers to unlock a universe of open financial applications. Founded in 2017, Compound is the second largest, maybe largest now, decentralized lender. Is it the largest?
By a margin, yes.
Okay. I know it's day to day here. For the audience, we're recording this on the last day of June 2020. Prior to founding Compound, Robert was a financial analyst, economist, and founder of two software startups. Full disclosure, Robert and I are friends. He's an investor and advisor to the Braintrust project, has been immensely helpful, an amazing thought leader in this space, and we're lucky to have him on. Welcome to the show, Robert.
Yeah, thanks, Adam. It's great to be here.
Great. So, Robert, I mean, you're a pretty well-known guy in this space, but just for the benefit of newer people to the audience, will you tell us a bit about your past and what led you to found Compound?
Yeah, that's a great question. So I started my career as a bit of a bond geek and rates guy, where I was involved in interest rate markets and traditional finance. After that, I wound up becoming a software founder and product manager. So working in Silicon Valley, building new technology products, and really, focusing on, software solutions for real world problems. And for me, these two things really came together in 2017. I'd been following Cryptonetworks for a while. I did a little bit of Bitcoin mining in 2013. I was aware of everything that was, happening and possible. But, in 2017, for me, I sort of had this like light bulb moment where I saw that the Ethereum blockchain was enabling smart contracts to actually start to program assets and how they behave and what you can do with them. And it started to reach a point where you could start to like really program money. And for me as, a bit of a, interest rate geek and, software person, I said, well, wow, this is like an entirely new opportunity that, hasn't really been touched yet. If anyone recalls back to 2017, it was mostly focused on ICOs and people creating tokens, and not that many teams and projects trying to leverage the superpowers of smart contracts to be able to create entirely new financial applications. And so for me, that was like the moment where I said, wow, like this is a great new technology. It's going to unlock extremely powerful things. I want to go all in and head first into this new market.
Nice. And so for anyone unfamiliar, the 60-second on Compound itself and how it works.
Yeah, so Compound is a series of interest rate markets for Ethereum assets. When we started the project, there was only a couple Ethereum assets. Stablecoins weren't really a thing yet. At this point, we create interest rates for stablecoins and, Ethereum tokens. And our vision is that over time, more and more real world assets, from currencies to financial assets, et cetera, will wind up being represented on blockchains, particularly on Ethereum. And we'll be able to create interest rate markets for all of those assets too.
And so an example use case today, and in full disclosure, I'm a small participant on your protocol myself. So I could go in and lend a digital asset like Ether, which is the token that powers the Ethereum blockchain. And then that locks into your Compound smart contract. And then I could borrow something like USDT Tether, right? And your protocol basically acts like a bank does today, except it's instead of the bank and regulations setting how things work, code is literally law in your case. Is that right?
Yeah, so the Compound protocol, you touched on the two primary use cases. One is supplying liquidity to a market and earning whatever the interest rate is. In a conventional sense, you provide dollars and you earn an interest rate, at a bank or in a money market fund or, to a peer. It's the same thing in Compound. You earn a prevailing interest rate when you provide an asset for others to use. And you can also borrow any of the supported assets if you provide collateral to the protocol. And as you mentioned, it's like that there is similarities to a bank, right? They both function on interest rates. The difference with Compound is it's a series of essentially computer programs that are deployed onto a blockchain so that anyone can see how they work, anyone can see why they work, anyone can see how they behave, and all of the logic is codified in these contracts. They're not run by humans. At this point, there's a decentralized community that can upgrade the contracts and maintain them, but the entire thing is autonomous. So, in order to, add more volume, we don't have to open up, physical bank branches on corners.
Yeah.
The protocol naturally can scale without anything changing. Any user can come to the protocol and just begin interacting with it. And that's the primary difference.
So that's one of the many, I think, real notable innovations here that your team has created is it's purely market driven, right? So the interest rates are set algorithmically, completely based on supply and demand. So as what's amazing about that is you've cut out the middleman and turned him into code, basically. And so as supply of an asset increases, the rates will go down. As demand for an asset outstrips supply, the rates will go up. Is that generally correct?
Yeah, that's exactly right. So one of the things that we, pioneered in 2017 was using a codified interest rate model and algorithm to set rates based on supply and demand. And it's not that different from the way financial markets work in general, or the way a central bank works in general, right? Everyone collectively is assessing the supply of money and the demand of money, and the interest rate, follows it. The macro 101 textbook, from freshman econ is, the interest rate is the price of money, right? And just like anything, the price is based on supply and demand. And Compound replicates that just entirely in code. And so when an asset is scarce and it's in demand, the interest rate's high. And when there's tons of it and, demand for it's low, the interest rate is low. And we've codified that. And it's great to see it play out over time. The markets, update in real time without, humans having to go into like a spreadsheet somewhere and change a number. The whole thing just runs autonomously. And it's been operating for a couple of years now. It's really cool to see, the growth of the Compound and how it's evolved, and to see how interest rates have gone high and low and, zigzagged and sideways and all these things over the years. And we're starting to produce like a really interesting data set on an entirely new financial system.
So, it's extremely well put, and it's one of those. Yeah, I think it's one of the best examples yet of tokenized technology simply replacing a middleman who is extracting disproportionate value. Right. I mean, it's the cleanest and best example yet. And so you mentioned earlier putting other assets on this. I'm curious to hear your vision. I realize you don't control the protocol anymore. You're a meager voter like the rest of us now. But like, what do you think the potential for Compound is? Like, what other kinds of assets could you see being used as collateral or borrowed?
Yeah, it's a great question. So one of the original theses that we had was that, the rest of the world would come to crypto. I mentioned this before, but when we started, stablecoins weren't even a thing. Especially not on Ethereum. And now stablecoins are extremely popular. Everyone knows, hey, this is a way to represent a dollar or, a euro. And they're widely used on blockchains. And we never really anticipated that. We knew it would happen someday. And the original thesis was, well, everything's going to become a digital asset. I think the same level of surprise is going to happen over the next 3 years. So in 3 years, I think people are going to say, oh, it's extremely common that fill in the blank is now, widely available on a blockchain. It could be stocks and bonds. It could be real estate. It could be something else. But I think in 3 years, we'll be surprised again. And so, we're sort of allowing, the rest of the world to come into crypto, as opposed to saying like, oh, we have to go out and build a bridge to this other thing and create a token version of it. Over time, more and more assets wind up on a blockchain. So in 3 years, I think there's going to be more assets available in Compound that we just don't even visualize right now.
Yeah. So we're going to come back to governance,
Definitely.
because I think the other big innovation here you've created is governance. We're going to come back to that. I'm going to switch gears over to Gabe though right now.
Yeah. So Robert, you mentioned something really interesting, which reminds me actually like the thing that interested me most when I kind of got into crypto. You talked about like being able to program money, right? Or program interest rates. One of the things that was most interesting for me was being able to program incentives. and to design new markets and new networks with new incentive models that maybe didn't exist before in these kind of legacy spaces. You're an active investor in the space. Maybe you could tell us a little bit more about kind of your investment thesis, areas that you're really excited about.
Yeah, that's a great question. So I'm excited about things that sort of follow in the sort of same like idea space as Compound, where you're using a new technology to make a more efficient market or system. Um, in some ways, like a blockchain and a smart contract and these like networks are an opportunity to be like not just like a small iterative like improvement over an existing system, but like a massive step function change to the way things worked previously. And so everyone's excited for different ways. Some people are excited about like Bitcoin as a currency, that it might displace existing currencies. I'm actually excited about like financial efficiencies. The first thing that got me excited was sort of what we're doing at Compound, where it's like, oh, okay, we're able to reduce friction, increase transparency, increase speed, increase, participation and openness by like factors of 10 all across the board. And it's because, we're just doing something very basic. It's, hey, building something using open source code on a blockchain instead of the way it used to be. And so the things that excite me are things that are like leveraging sort of the best properties of crypto to make massive improvements over the way things operated, even today outside of crypto or like 10 years ago, or, that are able to compete against like the status quo. And that's really my core thesis.
Super cool. I mean, and you were really early on Braintrust, right? Like you were early at the idea phase, and you backed us when it was like I'll say like a deck and an idea, and two people that like wanted to dedicate their lives to this. Like, it's so different from programming interest rates and programming money. Like, what was compelling for you? Like, why allocate to the space that we're in?
Yeah, so there's a couple of things that excited me. One is the fact that like when you look at building a global business, crypto is just a significantly more efficient sort of like financial back end than the existing structure. So, any business that's inherently day one like global or is best off when there's no borders, I think benefits tremendously from being built in the crypto sphere, right? It took Airbnb like 10 years and like a payments team of like hundreds to like manage payments across every single country, right? And to figure out all the nuances of different currencies and different banking structures to make it all work. It's extremely difficult to scale from zero to global domination. But when you're using crypto in this fashion, like it's conceivable that you can scale to global domination without any of that difficulty, without all of the hard parts, without having to reinvent the wheel 150 times, and have an engineering team of like, hundreds just focused on solving that, right? So the first thing that excited me was, I think like a talent marketplace is best served by being global. And to do that, like, I think, you can build something bigger and faster when it's built to crypto. So I think that's really exciting. And I think that like over time, there's this second component, which is using the sort of like native asset to align incentives. I think one of the things that crypto is great at is being able to create very transparent, very easily understood and very programmable ways of like making the incentive alignment very clear and transparent. And so I think there's a lot of power there. On Compound, we're trying to align the users with the long-term success of the protocol, being able to upgrade the protocol, being able to govern it, making sure that no one, inadvertently shoots it in the foot or kills it, right? And so I think that's the other second superpower, of a business like this. And so that's what attracted me, is that like you could achieve both of these things, scaling globally without all of the frictions of building a global entity, and two, building something that's like more collaboratively like owned and incentivized between both sides of a two-sided marketplace. And so that's exciting.
Cool. And so you have a new fund, right?
I have a fund that I've been investing from for a little over a year called Robot Ventures, but I'm also I try to do a lot of angel investing in the space as well.
Cool. Any kind of themes you're excited about for that are like kind of 2020, 2021 themes that we can talk about a little bit?
Yeah. So in general, I think, the theme that I'm most excited about is decentralized finance. And there's a lot that goes into even that phrase. And I think in a lot of ways, Braintrust is, part of that,
Yeah.
but, for me, decentralized finance means building systems that don't run on the legacy, payment stack and financial stack, and financial product stack, but where, it's global, it's open, and it's transparent. And there's a lot of things that go into that, but like at its core, there's a whole spectrum of new financial products and services that are emerging. Compound is one, Braintrust is one. There's going to be thousands others that are going to succeed extremely rapidly, because they're able to, reach a global audience, cut out middlemen, do things autonomously with low overhead, and really be composable and interact with other financial products and services. So that's my theme.
Yeah.
At the end of the day.
Been really interesting. I mean, Adam and I talk about this all the time, which is like this kind of fundamental belief that, user-owned, user-controlled networks that cut out middlemen will essentially grow faster and become more valuable than like the traditional investor-owned hierarchical networks. And so really excited. I mean, thank you for all your work in helping to push that forward. And we're certainly happy to follow right behind.
Yeah, thank you.
And one of the most, I think, shocking things about the adoption of all of this, and I'm trying to sort of transition into your comp token, your governance framework, which, full disclosure, we are fully copying from you at Braintrust.
Great. I am excited for that.
Thank you to you and your team for open sourcing this and doing all the work to integrate with Coinbase and test it and security test it. And I remember sitting in your office a few months ago and just marveling at, the sophistication, and we were going to reinvent the wheel. And then I saw you doing it and said, well, don't have to now. What I find so fascinating is, one thing we're always sort of explaining here because it's important is, when we say a user-owned and user-controlled network like Compound or Braintrust, we're not talking about a financial token returning dividends and profits off of a network, right? Like that's just not part of the game. It's a token used to voice your stake in the network, right? And that in and of itself is interesting. We're already having our talent ask when they can vote their tokens because I think they're watching people voting your tokens. And two, the other kind of innovation here is around how they're distributed, right? And I know this has been like, you guys are truly the canary and the innovator here, watching your distribution tactics. But the point is, this is a governance and an incentive mechanism, right? And so the more you use the network and help build it, the more you'll get. So first of all, maybe just describe to our audience, what comp token is all about, what it's used for, and how to get it. And then I have a few more follow-ons.
Yeah, that's a great question. And I'll go even farther back, which is what I see the purpose of decentralization is in the first place, and like what the best outcome possibly is. So in my mind, when an application or a product or like a financial service can run forever and everyone knows that it's going to work forever, it's most powerful. And so the goal of compound governance, has been twofold. One, we want it to run without us. The human life is short. If you design something that works really well, like it should outlast everybody. And a financial market should be able to last for hundreds of years. It shouldn't be dependent on, a core team. If you're building something really big like a market, you want it to run forever. And the second thing is you want it to be upgradable by anybody. Now there needs to be, some processes and some hurdles, and it should be, difficult to upgrade something that millions of people use and rely on, but it should be upgradable by the community. Because at the end of the day, the wisdom of the users and the crowd and the stakeholders is going to vastly outpace the wisdom of a couple people, sort of like sitting side by side. And so, the compound token, at its heart is, a format for the holders of the token to upgrade the protocol and maintain it. And that's it. It's really just a very simple system for those who have the token to be able to come together to make changes to this protocol in this market that, billions of dollars are relying on, and, tens of thousands of users are relying on in, an open, transparent, fair process. And so what we've done is we've created this token. The actual mechanics of it are relatively straightforward. You can either hold the token and vote your own tokens, or you can delegate your votes to any other address. That could be a person, that could be Adam and Gabe, that could be, a DAO, it could be a software project, it could be an exchange, it could be anyone you want, but you can choose to either vote for yourself or choose someone else to vote for you. And from there, it's a system to propose changes to the underlying protocol. Oh, I think this variable should be different, or oh, I think this should work a little bit different in some way. And all of the people with votes can then on-chain choose whether or not they agree with your proposal. They can, say yes, or they can say no. And if it comes out to be a yes, the proposal actually updates the underlying system. It doesn't then have to go through a process of someone has to go out there and build something new. It's like, if the proposal goes through, it actually directly upgrades the underlying protocol. And so it's a very effective mechanism to allow participation and changes to, a very important system.
I mean, code is law here, baby.
Yeah, it really is.
Cool. This is like the opposite of the way in which decisions have been made in traditional corporations for the past 100 years, right? Which is basically the highest paid person in the room makes the decision about what should be done. So cool to see this stuff come into play. So this convergence of both the open source movement and also crowdsourcing, and they're coming together to have this wonderful child.
I mean, yeah, and sorry, go ahead.
Yeah, I mean, compared to the corporate governance of something like Facebook, right? Again, disclosure, I own Facebook stock. It's a great company, but what are you voting on there, right? The board of directors who are ultimately overruled by the oligarch, right? What is the point of governance in a company like Facebook? It's just one man runs that thing, and it doesn't matter how many 2, 3, 4 billion users, doesn't matter, right? It's one guy runs it, and you're just doing the opposite here.
Yeah, yep. And what's great is, and that's a great analogy, the compound governance system, and PS for everyone listening, it's open source. We actually want other teams to take the best parts of it, copy it, recycle it as much as possible. We're just the starting point for other teams in a lot of ways. And I think that everything gets built on the shoulders of giants, and that's what creates growth for everybody. But one of the things I like about it is that any sort of system can emerge. It's actually been designed with the principle of liquid democracy in mind. What that means is if you want to participate directly, you can. And if you want to, have someone else represent you, you can. I can see a scenario where there's lots of people participating as individuals because they directly voting on things. And a lot of other people say, oh, who's the smartest member of the community that has views that align with mine? And I know he's going to vote the same way as me, or spend more time paying attention to individual proposals and getting involved and being active. You can have anything, right? You could theoretically have things that look like a board of directors over time, or you could have people participating on their own, or some hybrid of it. It's really up to the token holders to come up with whatever outcome they want. And you might have people with more power than others. They might get the delegated support of lots of community members and have more of a voice. And we're going to see all of this unfold. And it's kind of like this grand new experiment that, pieces of it have been proven for centuries with, our republic here in the United States. And pieces of it have been proven with corporate governance, here and internationally. And we've really been inspired by a lot of sort of existing systems, and seeing it unfold on chain and for a financial market is going to be really cool.
Look, I mean, it's nothing short of historic for so many reasons, and I'm not trying to bloviate on that. It really it intersects finance and technology and governance all into one place. And they're just experiments, just like everything else is. We have a lot more to get to, but one technical, or sort of technical, but to me it's a UX feature that you guys pioneered with Coinbase that I really wanted to call attention to because it hasn't been talked about much. So you and I are engineers, we go way back in this space, and we know how, for all three of us actually, how frightening it is to lose private keys. And what really kind of just fucking brain damage this whole space is most of the time. And even as an engineer, right? It's just like when you're sweating, when you sign that Ethereum transaction and you're like hoping that fucker had enough gas to get across the chasm, like it's stupid. So one of the things that I thought was incredibly innovative from the Compound Group and from Coinbase is, so if you're going to vote your tokens or vote or delegate your votes to other token holders, you generally have had to sign transactions from a hot wallet on the internet, right? And so what that means, sorry for being too technical, like what that basically means is if you're going to vote, you got to kind of take your valuable assets, your bearer instruments out of a cold storage environment where they're safe and get them onto your internet connected, potentially malware infested computer and vote with them on, a potentially hazardous setting. And so
like
what Robert,
a duffel bag of cash down from the bank and walking it down to a polling station and standing in line. Right.
Thank you. That is an even better analogy. So very, very long-winded. But so the Compound team is innovated here with Coinbase is they allow voting tokens from cold storage. Do you want to just quickly talk about how that works and why it's important?
So I'll start with the background. So, in a lot of ways we had what I'll call second mover advantage or like late mover advantage in seeing crypto evolve for a couple of years before designing and launching the token. We created the comp token at the very end of the process of handing control to the community. We didn't start by creating a token years ago in an ICO and then hoping that, we wrote the code and designed it the right way. We didn't design it until our protocol was live and there was lots of users and we knew exactly what it should be and why. And so one of the things we did that's different from a lot of other tokens out there is the token itself has a lot of voting logic written directly into the token. And it's because we got to see some of the frustrations that were out there, right? Exactly as you described, in order to vote tokens, you have to put them in an extremely dangerous position where you're putting value at risk in order to vote. And everyone hates that. And it's extremely complicated and scary. And so what we did is we built the concept of assigning votes directly into the token itself. So if you hold the token, you can specify any address that's responsible for voting your tokens. And this goes back to delegation. So this can be you're delegating to yourself, but on a different address. You can say, keep my tokens in cold storage or in a custodian or in a very safe place and allow my super dangerous, Web3 MetaMask address to be the thing that votes them. There's no funds that move. There's no assets that transfer. There's no funds at risk. There's no, night sweats to say oh my God, what if there's a issue in the voting, process? Your funds stay in secure safety, but you can vote with them from any address. And this is programmed directly into the actual token contract itself. And this has enabled really cool product innovations elsewhere. So when we launched the token, we launched it with Coinbase Custody. And Coinbase Custody was able to build this really cool product and asset flow where your token stays in the security of their custodian and you can vote without the tokens ever moving around. You can even delegate to your MetaMask address. You can vote from custody. It's made it really easy for people to keep their assets safe and participate in governance at the same time. And
that is such a giant. That's one of the biggest UX innovations of the space, and no one's talking about it. I don't get it.
Well, we can talk about it more here.
It's it feels like it opened up a whole new market for governance, right? There's just too much friction involved in governance without enough incentives. And what you guys did was really open up both you guys opened up a whole new market for governance, where people actually can participate in this and will participate because there's much lower friction involved.
Yeah, thank you. We're extremely proud of the work we did on creating the token and the governance contract. A lot of people, take like a surface level, view, and they're like, oh, you vote. Okay, great. But we spent a lot of time in R&D trying to design, really what we thought would be an optimal voting process for a blockchain application.
Nice. Let's keep moving then over to how people get the compound token. So we've talked about what it's used for. Makes sense. This has been a very fervent topic lately on Twitter. And so how do people get the token? And we've seen some sort of odd, incentive loops and patterns appear. Like, maybe start at the top and then go into, maybe your thoughts on how this is playing out so far.
Yeah, it's a great question. So we primarily distribute the token to users that use the protocol. And so the way the token is distributed right now is we've placed, an extremely large quantity of tokens into the protocol itself. We placed, 4.2 million tokens into the protocol. And this,
which is about 42%, right?
Yes, which is like, over $1 billion of tokens right now at current market prices, which is kind of funny to think about. But we placed $1 billion of tokens into the protocol, and the protocol automatically distributes it to the users of the protocol every 15 seconds for the next 4+ years. And this distribution process itself, just like the entire protocol itself, is controlled by the token holders. So if the token holders want to modify the rules or change the parameters or do anything like that, the token holders can vote on changing the way it works. But the protocol distributes tokens to users based on their usage. And so far in the first 2 weeks, this is also a grand experiment. We weren't really sure exactly what to expect. It's hard to get things exactly right when it's completely uncharted territory. And we designed it in such a way so that like the token holders could tweak and change the parameters as time went on. But in the first 2 weeks, we've seen this like extreme increase in usage of the protocol, because now users know that they wind up being able to control and shape the future of the protocol by being a user. It's like unlocked this crazy usage of the underlying protocol. When we launched the comp distribution about 2 weeks ago, there was about $150 million of assets supplied to the protocol. And that makes sense, when the users aren't receiving a say, when they're not receiving ownership and control, it's different from when they're receiving ownership and control. It's exciting. It's like an entirely different paradigm. And so since we began the token distribution, we're seeing a massive uptick in usage. Users get it. They're bought in. They're excited. And there's now $900 million plus supplied to the protocol. And, we've seen this as like fervent reaction where, by bringing people in, one, it gives them the ability to shape the protocol with their votes. And two, it gives them, a skin in the game.
Robert, at the risk, that's amazing. It's been a marvel to watch, very inspiring. At the risk of getting a little too in the weeds, but I think it's a worthwhile question. So I saw somebody on Twitter, it may have been somebody from Multicoin or something, said, paying people to use your protocol in comp or doing what you just described is likened to wash trading on a centralized exchange. Would love to hear your response to that.
Yeah, so I think one of the important things is that, Compound as a market and a protocol has been live for years, right? And it's been functioning for years. We're now adding, a token distribution on top of what's already been working. So if the token came out of nowhere onto a protocol with 0 users, right? I would humor that view a little bit more. The reality is the token's being added onto what was already previously the second largest DeFi application in the universe, right? That already had tens of thousands of users and a huge foothold within the ecosystem, and now is, being used to share, the collective ownership of that system. And so
Yeah.
I can understand the sentiment because it's definitely drawing users in, period, right?
Yep.
Now that there's
Yeah.
a distribution of comp tokens to the users of the protocol, more people want to be users. And they're willing to like really ramp up their usage in order to be an owner of the protocol. And so in that sense, yes, like it's new. It's definitely increased participation. And we'll see where it goes.
Yeah. So I want to tie this back to something, because I think it's actually a really interesting point. As you know, like both Adam and I have been long-term marketplace guys, right? Like we used to cry in our beers together 10 years ago about the challenges of building a two-sided network. So, for those of you that are familiar with marketplaces, like, if you look at the businesses over the last 20 years, these have become the most valuable companies on the planet, is, proprietary network effects in two-sided marketplaces, but they're notoriously hard to get started. And most of them fail in like what's called the bootstrap phase, which is like getting enough people on both sides to come and play in your sandbox at the same time. And it's really like I think a misunderstood component of crypto and blockchain is the ability to use a token to jumpstart the network effects, right? To incentivize people to join the network early before there's real utility value, and incentivizing them with the potential of like participating in the network and participating in the governance of the network. And so I'd love to talk a little bit about that, because I think it's really still there's kind of like blockchain investors and maybe there's like marketplace investors, and there's not a whole lot kind of in the middle that really understand how you can use these tokens to get the best elements of a two-sided market with proprietary network effects, but without having to raise $2 billion of venture capital and hire hundreds of thousands of people. So I'd love to kind of get your take on like, how do you think this changes early stage investing? And also, how do you think it changes the mindset of entrepreneurs, trying to build marketplaces in the future?
Yeah. So I'll start by saying that I think a marketplace is a product like any other. There's two customers for the product, but the product is the market. The first thing I'll say is that, if there's no demand for the underlying product, if it were larger, nothing will work in the first place, right? But if you can add incentives onto something that would otherwise work and be popular, it can get you there faster. So if, Nike, was giving out, ownership of like, the Nike everything to its customers, with every shoe purchased, that would be sort of akin to like, distributing sort of like ownership and control to the users, right? And that might work and might add even more fuel to the fire, because like people want Nike shoes in the first place. It's, something that people already want. But if you were like giving out, collective ownership and decision-making over something that nobody wants, like a really ugly pet rock, it doesn't matter. Like there's nothing to like, amplify. Like, it's like your pet rock business will go nowhere, even if you try to give out, pet rock governance tokens.
This is most of crypto in 2017, right? This is a whole bunch of like nerdy solutions trying to solve a problem that doesn't exist. To your pet rock example.
Exactly. So like there has to be something of value there in the first place, right? Like, and if there's a marketplace that will have value when it's larger, like genuinely, right? Then it makes sense to jumpstart it. If it's something that won't have any value because like no one actually wants the product, whether it's a marketplace or whether it's like a financial service or whatever it is, then it doesn't matter how much juice you add to it or how much like fuel you add to the fire, it's not going to go anywhere. Right? So like at the end of the day, it has to be an important and valuable product.
Yep. So that's a perfect transition into like what we call the lightning round. And the idea here is just like kind of free train of thought, a couple sentence answers to a few things. So, all right.
I'm ready.
So you get to go back in the rewind machine here, Robert. And you get to give some advice to your younger entrepreneurial self in the early days. Like, what's the biggest words of wisdom that you would have given to yourself entering in this space a few years ago?
There's a couple. One, build something that people want. It's classic sort of Paul Graham advice. Two, it's do one thing at a time. If you look at the sort of compound history and, narrative, we would do one thing really, really, really well, and then do one more thing really, really, really well, and then do one more thing really, really well. The biggest flaw I see in a lot of early stage teams, especially in crypto, is they're trying to do too many things. They're trying to reinvent everything as opposed to reinventing just one thing. And then once you succeed, maybe reinvent one more thing. But they're trying to change too many things all at once out of the gate. And so I would say, to distill that, like focus on one thing at a time and do that one thing extremely well. And lastly, focus on security. And this is actually more abstract, but like I see this as like a major problem in the space for everybody. There's this trade-off between, in any startup, you want to move fast and break things, but with crypto, you're also dealing with money. And there's this like extremely difficult trade-off between moving fast and breaking things and being secure. And I see so many teams get this wrong, and they're focused on growth, but not secure growth, right?
Yeah.
And it puts funds at risk. And so the third thing I would tell to anyone entering this space is you're better off like building something that's like a prototype to like see if people want the product, and then like not trying to scale it, building the safe and stable and final version of that, and being willing to like migrate your community or transition your community. At Compound, we had Compound version 0, version 1, which was the first production release, and then version 2, which we saw as like the final secure and stable, thing that should last for 100 years, right? And so, I think teams mess this up all the time, like just looking to like grow really, really fast without any other consideration. So security is the third.
That's great advice. Speaking of security, actually, so our next lightning round here. Any thoughts, Robert, on the security of Ethereum as a base layer, as a threat to these dApps, right? Because somebody could come in and just start buying up Ethereum and take control of the network, and then all the ERC20s built on top have an issue. Any thoughts there?
Yeah, it's a great question. At the end of the day, miners can either process transactions or not process transactions. They can't steal your private key, and they can't make you sign something that you wouldn't otherwise sign. They can censor transactions, but I actually think that a little bit of the sort of security concerns are overblown. To be honest, like there's always the critique of like, oh, how could you have $1 trillion of assets represented on a blockchain if the blockchain is only worth $20 billion, right? You can, because as long as there's more than one miner out there, you can always move your assets off. You can always move your assets away. You can always interact with the smart contract based on the rules of the smart contract. There's very clear limitations to what miners can and can't do. Right?
That's a great point of view.
And so,
thank you.
I personally am not concerned. I think at the end of the day, like you always have the opportunity to switch, and it's self-defeating for like miners to try to like completely like jeopardize their own network that they're fully bought into. Like it doesn't really serve anybody. So I think the game theory plays out that like this will continue to work for a long time to come. It might be slow, it might be expensive to process transactions, it might have major scalability concerns. But at the end of the day, no one can steal your assets. They can just choose to censor, and not process your transaction or not. But like, I think Ethereum will continue to be a hotbed of DeFi for years to come.
Well, in follow up to that, then, are the layer 1 wars, so to speak, over? Has Ethereum won?
I would say I'm extremely skeptical that other chains will make major inroads. I think it's possible, but I think it's going to be very slow. And I think Ethereum has a network effect already, and it's very hard to displace a network effect. Something has to be not iteratively better, it has to be a step function better. And so we will most likely see another chain win, but it truly has to be a step function. And most of the things out there are just iterations.
Yeah. So shifting gears to more of a personal note here, like we've all been in shelter in place since March 12th or so. What have you learned about yourself during shelter in place, Robert?
Oh, that's a great question. I've learned that I work a little bit too hard sometimes. There's users in our like community who are like, wait, why is the founder of a project chatting on Discord at 4 a.m? And I'm like, well, that's because like home is the office and office is the home. So I kind of find that I have to carefully manage my own effort. Otherwise, I go all in on work. I've also learned that it's actually surprisingly easy to cook a variety of meals. I was the type of person that was like, 6 nights a week ordering in. Now it's like, 2 meals a day, 7 days a week being cooked at home. So that's a big difference.
Nice.
But on the more serious side, I mean, I actually think that, I've learned that, you can have a level of collaboration working remotely that I didn't really think possible. And like, I'll be the first one to say, I think everyone working side by side in one office actually is probably more collaborative and more productive and better for ideation and sort of creative development. But I think like being fully distributed, is not like a 90% drop off in efficiency of a team. I think it's more like a 15%, difference. And in my own mind, I actually thought, going into this, like, oh, remote work is going to kill Compound. It's going to kill, the way things get done. And like our team personally has actually held a huge amount of efficiency and effectiveness, even going from full centralization to full distribution of work. And that's been a surprise.
And that's only that's only one dimension, right, of measuring how this works, right? Like you're measuring on the whiteboard experience or the water cooler experience, right? Versus the measurement of now I have a completely global pool of talent to pull from, and when I place a job ad, I get 1,000 responses instead of 7 responses when you're typically recruiting in Silicon Valley.
Exactly.
So I think that people are just starting to kind of see all the kind of second order benefits of distributed work. No, it's definitely been beneficial to us. So touching on Silicon Valley here, traditionally companies have been built in Silicon Valley. Everyone huddles in an office and works really long hours and has like kombucha on tap and like all their laundry done for them, things like that. This has now pushed people to work distributed and work in a remote way. Big companies like Twitter, just saying that people can essentially work indefinitely from home. What do you think? Like, the Silicon Valley, is it on the way up or on the way down?
Personally, I actually think it's on the way down. And I think and I'll justify my answer by saying, I think it's on the way down because like this sort of network effect and superpower that it had was all of the investors are in one place, all of the teams are in one place, and everyone's sort of like geographically here. It turns and like, why is that effective? It's like, well, because it's very easy to like, drive 10 minutes or take an Uber for 10 minutes and meet someone face to face, right? And that was the advantage over every other market, right?
Sure.
Period. And in a sort of distributed world, as like we start to like move away from that, it's like, it doesn't matter where the engineer is located. It doesn't matter where the investor is located. You can probably run just as successful of a venture firm from the Bahamas as you can from San Francisco. Like, it doesn't matter at this point. And so I think geographic advantages will subside. And I think that could be potentially difficult for like the San Francisco, like real estate market or like the local environment. Like, I think you're going to start to see like a little bit of an exodus in a lot of ways on both, commercial and residential, but like, it'll balance out. Like, people go, where it's easiest to live or, where their dollar goes farther. And like, at the end of the day, I think it's going to sort of deplete a lot of the inherent advantage that Silicon Valley geographically had.
I agree with you. It's why we're starting to see a trend on these responses, like those of us that are local and have been, as the three of us are for our whole adult lives, basically. Yep. We're like, I'll speak for myself, like sort of tired of seeing people like held hostage in San Francisco, in order to just be participants in this business. Cause it's not fair. It's not a great place to live. And it's, we've learned, like we did Braintrust completely distributed from day one and realized like, oh, actually having like a global team means that like the sun kind of never sets on what you're doing, right? You wake up, hand a baton, work, hand it off, go to sleep. And like, it's pretty, if you got Europe and Asia covered in addition to here, it's pretty amazing.
Yeah. Yeah, exactly. It's great. I mean, And I think it definitely has been a big shift for everybody. Like we can have our team work pretty much anywhere at this point.
Yeah, I mean, it's funny. Like we've ended. This is one of the reasons why Braintrust came out of stealth last week instead of waiting. Is like, we're a remote first model, and all of a sudden, all of our clients are asking, like, "Oh, wait, now that we're forced to do this, how do you do it?" And so we saw this giant surge. And okay, so just wrapping up here, Robert, appreciate your time here today. What is this is borrowed from one of my favorite people, Peter Thiel. What's something that you believe strongly that's an unpopular view today?
It's funny, if you asked me this, a couple of years ago, I would have had so many answers about compound. And, I would have argued for DeFi and I would have argued for all these things and everyone would have disagreed with me. And now there's starting to be this like communal vindication and buy-in that like, yes, you can have financial applications that run on a blockchain autonomously and they work. And like, seriously, 2 years ago, that was like heretical. Like no one would believe it, right? It was like crazy talk. So now I don't really have too many views that like fit into that mold. I'm just happy that like we've gotten to play this out. But 2 years ago, that like it sounded bizarre. Like, people looked at me like really weird when I said like, oh yeah, there's gonna be a financial market that runs on a blockchain and like connects like offline businesses and like all these things. And like people thought I was bonkers.
Well, I know
Only
they
2 years
laughed
ago.
us.
Is there
They laughed
anything
us out of
that you
offices.
think is true now that people would say you're bonkers for, or are you just sort of trying to catch up?
Yeah. Well, a lot of people, and I won't say who, but like a lot of people were extremely skeptical about us distributing like half the tokens of compound to the users. Like that, like I even had pushback from previous investors who were like, why would you do that? Like, why would you give so much value away? Right. And I think that's a little crazy. Like, handing off control to the community and ownership to the community is like a big shift that I think is going to look totally normal in another 2 years, right? It's going to be like, oh yeah, of course you do this,
Isn't it funny? Like the three of us are just too close to it right now, but like we all live 3 years, 5 years in the future, and it's painfully obvious to us, but like we do kind of look stupid right now, right? We're like, why would you give half of the value away just for people using the platform? And like, it's still too early to declare victory there, of course, right? But like, I think we might be onto something.
Yeah.
There's something there, which is like, remember when like software was sold on-prem and everyone like did these massive multi-million-dollar upfront contracts. And then these guys came along and said, hey, how about you just rent it by the month? Like that sounded really crazy. And now it's called software as a service. So thank you so much for all the work that you're doing and the perspective. We're obviously super excited to build on top of everything that you've been doing. Adam, why don't you round it out?
Yeah, Robert, thanks for the time here. This has been just so enjoyable. Please tell people where they can reach you online, find out more about Compound.
So yeah, and thank you. And it's been an absolute joy to be able to talk through a lot of these ideas with you. You can go to compound.finance, learn all about the Compound protocol, compound.finance/governance to learn all about decentralized governance and how token holders actually run the protocol today. It's really cool. Join the chat room, compound.finance/discord. There's a great community of people always talking about the protocol and ways to upgrade it. And, try to learn from Compound, take ideas from it, use it, evolve it, have fun. Crypto's an extremely exciting place and there's a bright future ahead.
Well, I know we sure are. So thank you again so much for being here, Robert. Awesome to talk to you, and we'll see you soon.
Talk soon.
Great to have you. Take care.